Hello traders, welcome to our YouTube channel. Today I'll be teaching you a special intraday strategy which a lot of expert technical analysts use. According to my backtesting, it has given me very good success rate. If you trade in cash market, futures and options, you can use this strategy. I suggest you to watch this video without skipping because if you follow all the points which I tell you, you will get more than 75% success rate with the strategy, which is more than enough to make consistent profit in the stock market. The name of the strategy is called early bird strategy. This is called early bird strategy because with this strategy we will be entering the trade at exactly 9:30 a.m. as soon as the market opens. Okay, I will be teaching this strategy for both buying and selling with live market examples. So now without further delay, let us see how the strategy works. There are some very important rules which you need to follow in the strategy. So pay very close attention when we are discussing about these rules to make consistent profit with this strategy. Okay, first let us see what are the rules to find buying opportunity. Please pay very close attention. Now traders, these are the rules which we need to follow when we are using this strategy. Okay, now let us look into the first rule. The first rule says Nifty has to give any one of the bullish signals. So what do I mean by this is when Nifty opens, okay, morning, when Nifty opens 15 minutes time frame, as soon as that first 15 minutes is over, Nifty has to form any one of these three patterns. Okay, it can be this one or this one. When Nifty forms any one of these three patterns, only then we will look for buying opportunities. Okay, is it clear? So what do I mean by this is example. This is Nifty 50 chart, 15 minutes time frame. This is 4th of March, right? On this date, can you see this? The first candle closed, right? This is a bullish candle. See, this candle number 3 is this candle, this green candle. Okay, so Nifty has to form any one of these three candles as soon as the market opens at 9:30. When you see Nifty 50 15 minutes time frame, it should have created a pattern like this or this. Okay, only then we will look for buying opportunity. Now rule number 2, the stock has to make a similar pattern like Nifty. So what do I mean by this is, for Nifty 50 I already told it has to make any one of these three patterns, right? The same way the stock which you choose, even that has to make a similar pattern like this. This means Nifty also is bullish and that stock also is bullish, right? Now you don't have to worry about which stock to select. I will give you the list of stocks which works very well with this strategy. I will give you all the details about the list of stock by the end of this video. Okay, so as of now, what you need to understand is Nifty has to make a pattern like this, that means bullish pattern, and the stock which you're choosing from the list which I give should also make this kind of pattern. Okay, now this is point number 2. Now before I discuss about the other points, I suggest you to pause this video and write down all these points for your reference. Do not take screenshot of this, because if you take screenshot you will forget things, but when you write something you will remember it for a long time. Okay, always make it a practice that you write important points in a paper or a book for your reference so that there is mind and body coordination. Okay, I practice this, that's why I'm suggesting. So pause this video and write down these points, or watch this video completely and then come back again and then you can write down the points, but you have to write. Okay, so now the point number 3 is entry above the 15 minutes breakout candle. What do I mean by this is, I already told you these are the bullish candle we need to enter the trade, but where to enter for these candles I will show you. Example, for this candle, right, entry will be here. Okay, stop loss will be at the low of this candle. Similar way, for this candle, entry will be here at the high of this breakout candle and stop loss will be at the bottom, right? Entry should be little higher than the breakout, okay, and stop loss little low than the low of this candle. Now for this third candle also, entry is above the breakout candle and stop loss is below the low of this candle. Okay, now all the candles you have seen, correct? So I've told you where to enter, that was point number 3, and point number 4 also I told you, stop loss at the low of the breakout candle. Now rule number 5 is book profit at 1:2. So what do I mean by this? Very simple. If you're taking 1 rupee risk, That means your reward has to be 2 rupees. So if you're taking 10 rupees risk, then your reward has to be 20 rupees. Okay, simple, right? Now let's say for example, your entry is here. Okay, let's say 100 rupees. Okay, and your stop loss is at 98 rupees. So what is your risk? Your risk is 2 rupees. Okay, so your reward has to be 4 rupees. Okay, very simple concept, right? So that is point number 5. You need to book profit at 1:2 risk to reward ratio. But if you're new to the stock market, okay, or if you're beginner or intermediate, I suggest you to exit with 1:1 risk to reward ratio. A lot of people will say 1:1 risk to reward ratio is not good, okay, but with this strategy, very much success rate you will have with 1:1 risk to reward ratio, okay. Especially at this current market situation, there is too much of volatility in the market. Okay, if you take 1:1 risk to reward ratio, there will be a lot of successful trades. So I suggest you to take 1:1 risk to reward ratio. But if you are a person who's okay to take risk, you can go for 1:2. But my personal suggestion is 1:1 risk to reward ratio. Okay. Now point number 6, you should not enter the trade after 10:45 a.m. So I will tell you what do I mean by this with an example. Now traders, the point which I'm going to tell you is very important. Okay, please pay complete attention to this. Here this is a bullish candle, right? This green candle. According to our strategy, where will be our entry? Our entry will be here, higher than this candle's high, and our stop loss will be here. So what happened? The next candle, it did not get triggered. Our entry did not get triggered here until 10:45. So when our entry did not get triggered until 10:45 a.m., we should cancel this trade and we have to exit. Okay. See, you kept an entry above this green candle, right? But no candle after that went to that level. That means your entry request did not even get triggered. Correct? So you will wait until 10:45. Even after 10:45, if your entry is not getting triggered above this candle, then you have to exit this trade. You should not take a trading opportunity. In this example, your entry got triggered only at this time, that is 2:30. But with this strategy, we should not wait until so long. If the movement is towards the upside, it should happen before 10:30. If that doesn't happen, you have to exit the trade. Okay, very important point. That's why I'm repeating it again and again. So this point says we should not enter the trade if it does not get triggered after 10:45 a.m. Okay, I hope you understood this point. So let's see the next point. The next point is very simple. Don't trade stocks which opened above 2% than the previous day. Okay, that means today one stock closed here. Tomorrow when the morning opens, if that particular stock, let it be any stock, if it's opened at a gap up and it is 2% or more than 2%, we should not take the trade. Okay, very simple rule, correct? Now let's see the next rule. The next rule says exit at 1 p.m. Okay, so with this strategy, you have to exit the trade at 1 p.m. If your trade is going in profit or loss, for sure it will go under profit, no doubt in that. But whatever is the situation at 1 p.m., you have to just exit this trade, because at 1 p.m. European markets open. When European markets open, there will be high volatility in the market. So it is very important point. You have to exit the trade no matter what the situation is. Even if you're not getting 1:2 risk to reward ratio, even if it is not 1:1 risk to reward ratio, you have to exit the trade at 1 p.m. With whatever profit you have got, you have to exit this trade. Only then you will be having a lot of successful trades with this strategy. Okay, now traders, the last 2 points are very important because it has to do with emotion. This point says you need to follow risk reward management. What is risk reward management? It is nothing but when you book your profit, how you book your losses, right? So according to the rule, you have to book your profit at 1:2, but current market condition, I've told you to exit the trade at 1:1, correct? That is risk management. The last point is follow your money management. What is money management? Let's say you have 10,000 rupees. Okay, it doesn't make sense to put your entire 10,000 rupees in a trade. Correct? You cannot risk the entire money. The maximum risk you can take is 500 rupees. Because if you lose 500 rupees, you can take a new trade. But if you lose your entire 10,000 rupees, you will not have capital to enter the trade. Right? So always make sure you do not risk more money than what you can afford. Okay, so these were all the rules. All these rules are very much important. If you follow all these rules, you will surely have more than 75% success rate with the strategy. which is more than enough to make consistent profit in the stock market. So let me show you some examples in the live market using this strategy. The first example is Tata Motors 15 minutes time frame. Okay, here you can see Tata Motors created a bullish candle, right? This 15 minutes candle is a bullish candle, which is this, correct? So our entry will be at the high of this breakout candle, stop loss little low of this breakout candle. Our risk to reward ratio has to be 1:2. But the current market situation, it's very difficult to get 1:2 risk to reward ratio. Okay, so if your entry was here, stop loss was here, you could have exited the trade somewhere here. Okay, but if you are a person who's okay to take risk, then you wait until 1 a.m. This is 1 a.m. candle, this red candle is 1 a.m. candle, right? You would have exited the trade with less profit. But if you understand the volatility, as soon as you get good profit, you need to exit this trade. Okay, you are in profit or loss, it doesn't matter, but at 1 o'clock you need to exit the trade because European markets also open. Okay, the volatility will increase even more. So this was the first example. Let us see another example. Traders, the second example is Reliance Industry 15 minutes time frame. Okay, see, Reliance created a bullish candle like this, which is this candle again, right? If it forms any of these candles, it's fine, but in this example it created this pattern again. Okay, so our entry will be at the high of this candle, stop loss at the low of this candle, right? Here it did not get triggered, it got triggered here, then market went under consolidation, right? Your entry is already triggered now because here it got triggered. Okay, and now the market went up. You can exit your trade anywhere here, but according to the rule, if you are exiting, this 1 o'clock candle is your exit candle. Say entry here, exit here. Okay, after this the market went up, all those things are fine, but we have to exit the trade here because according to our rule we need to exit the trade at 1 p.m. Okay, the main reason we follow all these rules is because we need to control our emotion. Only when you follow strict rules, you will not give way for emotion to control you and make losses in the market. Anyone who is emotional in the market will always lose money. To avoid that, you need to follow strict rules. Okay, so this was one example. Now let us see how to find trading opportunity using this strategy in a downtrend. Okay, now traders, these are the selling signal candles. All these three are bearish candles. Whenever you see after 15 minutes Nifty 50 making any of these three patterns, we will look for shorting opportunity. That means we will look for selling opportunity. Okay, so our entry will be at the low of the breakdown candle, stop loss at the high of the breakdown candle. Same way for this candle also, stop loss at the top, entry at the bottom, and even for the third type of candle, stop loss at the top, entry at the bottom. Okay, so if you get any of these three candles in Nifty, then you have to look for shorting opportunity. And now these are the rules for selling. Okay, the rules is just the opposite of what you did in buying. Okay, see, Nifty has to give any one of the bullish candle which I showed to you. Okay, the stock also has to make similar pattern like Nifty. So I've told you that I will give you the stock list, that I will do that by the end of this video. Okay, so that is rule number 2. Rule number 3, entry at the low of the 15 minutes breakdown candle. See, this is the 15 minutes breakdown candle. At the low you have to enter, stop loss at the top. Okay, stop loss at the high of the breakdown candle. Okay, risk to reward ratio is 1:2, but I've already told you in the current market situation, always try for 1:1 because you will get very good success rate. Okay, so do not enter any shorting opportunity after 10:45 am. Do not trade any stock which opens 2% below than the previous day's low. Okay, even in this you have to exit the trade at 1 p.m. So you have to follow risk reward management. Okay, you have to exit the trade in 1:1 or 1:2 and then follow your money management. That means you should not invest all your money in one particular trade. You have to follow all these rules. Okay, if you don't follow these rules, then it's going to be very difficult to make money from the strategy. Now let us see some examples for selling. Now traders, I'm taking Reliance Industry as example, 15 minutes time frame, to show you how the strategy works during downtrend. Okay, look at this candle I have highlighted here. This is a clean bearish candle, correct? So our entry will be at the low of this candle. The next candle only our order got triggered. Okay, the market went down. Here at 1 o'clock we need to exit the trade. Okay, and one more important point, stop loss usually we keep at the high of the candle, right? But this is a big candle, so what we can do to increase our risk to reward, we will bring down this candle to this level, because here this level was acting as a resistance. Okay, see, after this breakdown the market immediately has to go down within some 4-5 candles. Okay, if it doesn't go down, then there is chance of it going towards the upside. Okay, to avoid that, let us at least reduce our risk. This doesn't happen all the time. It is always important that we manage our risk when we're trading. Profit, what the market gives, we have to take. But stop loss, we have to decide how much we have to give for the market if our guess is wrong. So we can reduce our losses by bringing the stop loss to this level. Okay, see, after 1 p.m. the market went up. We don't care because we already would have exited at 1 o'clock here. So this was an example. This is the list of stocks with which the strategy works. I will share these details in our Telegram channel. Okay, we have backtested the strategy with all the stocks mentioned in this list. I suggest you to use the strategy only with these stocks. And one more important thing, for those who are option seller, you can short put option using the strategy. Even if the market goes up, your put will decay. Even if the market is still, your put will decay. So double benefit with the strategy for option sellers. Okay, traders, if you have any doubts, let me know in the comment section. I will be more than happy to help you. If you like this video, like and subscribe to this channel. So that's all for this video. I'll see you in the next one.